This conference will now
Can
be
you guys hear me
recorded.
okay? You should be. Yeah. This is Fatty Hemsey. It's 8:41 on Wednesday, 14th of April. Tomorrow is not tax day. No, it's not. Okay, it was extended to, I think, 17th of May. Meeting went very well. We started a little bit late. We started around 4. And actually, it was quite a drive, but it's going to be extended to tomorrow. Working lunch on it. This guy, as I said, he ran one of the exchanges, so he's very detailed person, shall we say? Yeah, a lot of questions and so forth. So I said fine, and so we're going to meet at his country club tomorrow at lunch. So working lunch, yeah. So okay, so. Aside from that, okay, where are we? Let's talk about our charts here. But first, let's go to econ calendar. There we go. Okay. Import export should have been out there by now. About 10 minutes ago. Looking at the charts are fairly quiet. 8:30. Yeah. We picked up at that. Import prices went up 1.2. A little bit better than consensus. Year to year also is at 7%. Geez, okay. 2.1 on export, 9.1 on export to year. All right. Okay, so we have decent demand on our end. Okay, that's good. That's good. Simple stuff. No, nothing fancy. All right. Kaplan speaks. He's from Dallas. We have EIA. Oh, geez, Jerome Powell again. I cannot wait for this COVID stuff to go away. Some of these people hire back some people. They do this complete. Before you used to click on this, it would tell you when he's speaking, well, of course, this says what, where is he speaking and what potentially is the subject of his interest for that speak. We don't see that. Beige book today at 2. We got to see that. I think it was this delayed. I thought beige book was last week. So we got to watch for that beige book today. John Williams is the second guy in command, effectively. He runs New York Fed, like Tim Geithner. This is the one that makes financing possible, okay, for the country and for all of us. Yeah, without him or that spot, we'd be in deep trouble. Claudia is the vice chair. Let's I don't know what he's doing. It's 3:45. Bostic is Atlanta. That's right. I should have known. And then Dallas again. So this guy's talking twice today. Got you. Tomorrow should be heavy. We got jobless claims. That's the one we got to watch. Last one we dipped down a tadish, I should say. No, actually we dipped up. The prior weeks, 2 weeks ago, we dipped out, right? And then that's New York Fed, New York manufacturing, inventory, and housing. So I wanted to watch housing there. The big one, I'm saying retail sales. Big one is retail sales to me at jobless claims. Nothing on Friday. That's of importance. Well, you got housing, but and consumer sentiment, but really, what's going on is option expiration, and this would be a double witching. Okay, so what's the expectation on housing? Let me see. Well, I'll take a little piece here of chocolate scores on. Okay. Wow. The structure, nice. In terms of consensus versus prior. Wow. If we go toward the higher end, holy macro. Okay. And also watch the permits, obviously, because if we could have a start, you could have permits. All right. All right, we're good there. Let's move on to PMT charts. There we go. And okay, we kept on going higher. Okay, I'm getting fried here on the PMT. Now notice, I bought those puts, both long term and deep out of the money. Why? Well, not deep, somewhat out of the money, but long term. I don't want to pay much for data. Well, let me show you a little bit more. Hold on. But if you heard me Monday, what I said, I expect to pull back, and it probably is not from the economics data. Some of it's from overseas. Look what Russia is doing by Ukraine. And while we're getting, at the same time, an untested blockade as a Secretary of State, you have a problem with the South China Sea with China and Taiwan. So, not that usually has an impact economically. I'm sorry, on market data, but it could give us a jolt. If not, forget it. Sky's the heaven. I mean, we just gotta go up. We can't. Obviously, that's a fallacy. That's not going to happen. But when that adjustment comes, we're going to be all caught wrong-footed. That's my current thesis. Hi, Jeff. How are you? So we went up, I think, 14 handles today. This morning, right now, we're up another 2 points. NAS is up 46. Okay. Oh, this should be SPY. Hold on. Yeah, remember we put that trade on. I put in the spider just to see its vibrations. Yeah, you can see also what's happening there with NDX. Okay, so at Divergent City, hello. Okay, peak, higher peak, lower peak. So somewhere in the future, this is going to show up. I just don't know when. But by buying forward out, your theta loss is smaller per unit of time, per delta T. Does that make sense? Easy, right? And look where we are now, 1821 area on the CI, so on and so forth. Okay. Here's about 10 and 15. Okay. So that's our timer chart. Canaries, man, I don't spend too much on it. But let's go to DT. Let's see what's happening here. This probably gives us more picture. Okay, we're not going up on RUT, I'm sorry, Russell 2000, while NASDAQ makes a new high. Okay. Heck, this is going to be at 14,000. Yeah. Probably today, it's today's trading over 14. That's a $280,000 CUSIP, if you think about it. If you think about it as a share, as a stock, well, look at futures because of 20 to 1 multiple. Your NQ, I'm sorry, I should say it this way. No, let me say it this way. NQ is trading around $280,000 notional, because 20 times the value of the index on the future side, not cash. So it's already over 14,000, 280,000. That's why this thing is a very, very tough game. It's not for everyone. Be careful. Please be careful. I turned out that customer request to come in with $10,000 cash. I said, no, you're going to last a few minutes. Or you have to trade MNQ, micro. But then there's a fee for a subscription. It's not set up for you to use MNQ. It's set up to use what people do it for. So it'll be a different ballgame. And it's just the cost of running it, $400 a month, that's $5,000 a year. You can't come into a trade thinking I'm going to use $10,000 to start, but I have a $5,000 a year cost of subscription. It's just not going to happen. It's going to be difficult. So I told him to go and get more money before coming in. And when you come in, you start very small. All right. New on SPX. Trends is keeping up. This is the problem. This gap is the problem right there. We can't have this. We can't have these three up there. This one not showing up. So part of it is also treasuries. We'll get into that in a second. SP1 Momo, long and long. This is weekly. This is daily. Mechanical system. By itself, all by itself. No parameters have ever changed since I think. Oh geez, this was written when we went into Topic Digest, so 2003. This part has not changed since 2003. I think so. Yeah, I think it's 2003. So I think Nancy may remember that. It's an offshoot of Hornet, our system called Hornet. All right. They all had airplane names. Hornet is F-18. Okay, we're coming up a tad there today. This is this morning. VIX trades before the cash open. So this is today's data. You see that? Well, this is yesterday's data. 13 down. Remember, we're going to be switching this by the weekend. I think maybe Thursday night or Friday night. This has to change to M contract. I love this part. In the channel, -1, -2, -1, -2. If we stay down here, we finally, hopefully, we'll break 20. Okay? You just can't be up here at new highs and you're trading at 22s. That's way too high. As a fact, I was speaking with this Buffalo yesterday. You can't be here either. This should be around like 9, maybe 9.5, maybe 10 tops. I'd say more 9 or sub 9. If history is any guide. So still huge COVID premium the market makers are demanding from all of us. Okay, keep that in mind. SQ, no signal here. The last signal that's pending is this one. I think we probably saw this with that little downdraft there. Okay. This one came afterward, and we have not responded. But remember, this has a window of 8 weeks to 10 weeks. Historically, that these 4 sigma, 3 sigma, high readings over 145, near 150. That's what they've translated to. Trend, forget it. TD, okay. Rendezvous point. All 3 stock RSIs are shooting up in this area. I won't be surprised. Hallelujah. Almost 91. Oh, jeez. Feel like doubling down on my puts. Wow. This is 91 now. This cannot stay up here. This cannot. So right now is buy. Wow. Kramer must be going crazy. Not Cosmo, Jimmy. Yeah. Yeah. We're not talking about the smart one. Yeah. We're talking about Jimmy. Yeah, exactly. Cosmo is the smart one. Anyhow, 91 here. Oldest indicator that we have used in our arsenal. And it's at 90.7. Wow. Okay. And then also the top formation continues unabated. 5.5 negative on the spread, which is also we checked on expiration. The VX, I'm sorry, K21, I'm sorry, J21, which is April's, right? This is April's. Yes. This one is lead. You can see the volume. Okay. K is behind it, but it's getting close. By Friday, we have to switch these over because next week they expire on Tuesday. This is the route. This is not 100 times the contract. This is 1,000 times the price. This is the realm of the big boys only. These values, that is going to be switching over by Friday. Even though the expiration is next Tuesday, I'm sorry, next Wednesday. Last trading day is next Tuesday afternoon. But they usually roll over on a Friday. So let me make a note here for myself. Harvey, where's my pen? There we go. Okay. So VX K21 live on Friday. Okay. And also we have a CL M21. These two gotta go into effect on Friday, which is the 16th. Okay. Now remember, a week before that I got my second shot, so I'm not clear out of the woods until 23rd. All right. Okay. Moving forward, we will do full-blown market PMT webinars. I'm trying to get back on the track, but this is a easy way for me to keep you guys posted, more frequency, and get away from all the chart posting that's involved. This way, you get every 3 days you get a view. You're actually getting 3 updates a week instead of 1, and less work for me. Plus, I can apply for my trading because I can look at what I'm doing for today, now. An hour from now, this is live in terms of activity. I have to make decisions. Actually, less than that, in 34 minutes. So same thing for you guys. So, okay, again, this is going unabated, rising. I mean, I'm not saying these will end bad. No. But we can't stay up here. I think these things will pull back shortly. Yeah, so we'll see. What now? Here's what we need to ask ourselves: what's the catalyst? Okay, what's the catalyst that's crucial? Okay, so we don't know, but I don't think I've seen 95.7 all these years. Probably financial crisis, 2008. So it's 12 years, 13 years. I don't think I've seen 95s, and also I haven't seen sub 5 either. I think the 5 I saw was in March of 2009, the low. Yeah, when S&P was trading 666. Remember that webinar we had? Yeah, a couple of days before the low. Yeah, I think it was a Friday, March 7th, which was a Saturday. We did a rare Saturday morning briefing, and not knowing that night. What do you call it? No. The following weekend, not Sunday night, 60 minutes, but following one is when Ben Bernanke came live on, well, not live, but that afternoon or something, that day, recording from the temple, the Federal Reserve office in the main office in Washington. We call it the temple. And that was it. That's all she wrote. We took off. But that was a 5 area. This is sub 5 for Corona. Yeah, look where we are now. I don't know. Don't know. This is just a lot of buy. Part of this is probably the money for the additional package, the second package, COVID package. But the market would know that market, so that would be discounting. So it totally behaved the other way. You would think you buy the rumor, sell the news. It didn't work like that. Look at the selling the NQs here. It cost, what do you call it? It cost DMZ. All right. Hey guys, I owe you all a webinar. We're gonna do it next week. DMZ ATR. I know Mike Carey asked for that. I hope respond to him overnight. Give him some stuff to read on ATR itself. But we're gonna attack that next week. Okay. Keep your calendar open. Let's say we shoot for Tuesday. Okay. Tuesday or Wednesday of next week. What's that? Hold on. Yeah, 20th or 21st. Okay. We'll keep your calendar open. At 5 o'clock, we're going to do a webinar. You're going to flip. It just changed the way I trade. Post GME. GameStop. Yeah, that was a really, really crazy day. All right. Let's go to treasuries. The reason I want to talk about treasury was the small caps have a lot of borrowing needs. They're not that big. They haven't raised that much enough, and there's a debt to equity on the balance sheet. This is a fundy guy talking now. Well, which I'm not no longer, but that's how I was trained by Jack Shelton over at AGSM. That's where almost financial analysts start. Really, technical analysis is something you teach yourself, and there's just now recently they're putting institutes or classes for it. Before there was no even credit for this; you would just do it on your own. But once you know that Russell, a lot of these components are using borrowing somewhere in here, somewhere in this area. But as we start popping, they get under pressure, and probably even though a portion of those guys are beneficiaries of an economy coming back, the cost is going up. Actually, the costs have gone up before the economy opening up. We're not open yet. I don't think so. We're going to still have issues. Look at Michigan. I don't think we're going to be out of the woods here for another 60 days. But stay vaccinated, get vaccinated, and be careful and be masking. Listen to data and science. The rest is BS. Don't fool yourself. But if we can survive another 60 days, I think we will do fine. I think we will. I think we'll kick it, lick it, and kick it, and we'll be out of our race. Okay? That's my two shekels on that. Let's see now what we did overnight. Hold on. Here we are overnight. Notice we're dropping here. Archives were, archives were, no, I couldn't post archives. Yes. Yeah, we have all kinds of issues last night. So I was not going to connect. I'll do it this morning. I was not going to connect to the servers in California and take that risk. Yeah. Matter of fact, last night I didn't do anything on CL and NQ. I just updated him this morning, just out of safety. Yeah. By the time, before I checked out of here, the truck was out there. I said, okay, these guys are here. Let me do this and then figure out what's going on. Anyhow, we're safe. Anyhow, these are posted. We're good. Notice it's still CLK. Okay. Now, one of the things I need to do is something I postponed. Once a quarter, we do a re-rating of the data, and it's a ritual. It takes for OTF. It takes about a weekend to do the work for the three names. Unfortunately, last quarter I spent a lot of time ags because we have a very high interest on agriculture, and the result is we're not. I'm going to give you good news now. We're not going to go with ags. There's not enough block trades to justify it, and plus you have a natural season. You have a seeding and you have the harvest. You can't do that. You can't go in between. There's nothing going on. You can't. What are you going to do the other 6 months? It's just not going to work. The whole machine is going to go nuts. You need a systematic environment which always is in need, like crude, NQ, and XL. High volatility, high trading, lots of volume, lots of interest. The interest in ags are not very good. Plus, you got that seasonal bias, and so we're not going to go there. But that time is going to be spent now to re-rate these. These have to be re-rated a little bit. Why? A different range. Also, the monkey range in between was GME. That we have 2 or 3 days, twice, that goes nuts. Okay, and unfortunately, we don't know it until you get there. Nobody's going to send you an email saying, "What kind of day we're going to have," or something that your system was not familiar with. It's showing up now. Okay, it's all rear view mirror. But that's what I need to do. I won't promise you this weekend, but the following weekend probably do a recasting here, changing all this cleaned up. Why? I need a little bit more data. We've got March in there. Yeah, we got Remember, we didn't do that in for edge contract. Just completely missed it between my move and the GME. We had some issues. We had a Comcast. A lot of that day we lost for like a day. Yeah, little GCFI socket was bad. Yeah, 20 like a $1.40 part created havoc. So, any questions for me? I thank you for attending. Keep 20th or 21st open. I'm thinking 21st Wednesday. You'll be pleased to see what we have to talk about. And when we talk about this is what we're going to be talking about. This gives you it's nothing new. We're not doing a new indicator. It's just applying different indicators together. And now that we finished off the coding, you got the bubbles and you got the ATRs, and basically giving you a natural cycle of fear to greed, so you can do SAR, stop and reverse. This is the work that was done by Wells Wilder back in the 60s. The code is in his. The ATR description, as a matter of fact, back then there was nothing to code. There was no computers. He was doing it by hand. But the calculation for the ATR is open code. I think everybody has it. If you go in Investopedia, you can see it. I just applied that against our DMZ to create an additional buffer, a band. And I was trying to really use it for something totally different. I was trying to use it for stop management. But by running a variety of the factors for how many ATRs you want. You want 1 ATR, 2 ATR. While they like to do 3 ATRs. Well, in some assets, like agriculture, you may have to, because the swings are so heavy, plus you have limit up, limit downs. Back then, most of the futures guys were doing agriculture. I mean, that's how futures started, risk transfer. People weren't doing S&P. Not in the 60s, there was no S&P futures. There was no NQ futures, or even bond futures. I don't think so. Probably bond futures came before S&P, but still, you're talking about late 70s, early 80s. I think Stuart Townsend was one of the first guys who ran a little wire underneath the Wacker and I forgot the name of the other street, Monroe. Yeah, next to CME to spit out on a BBS each tick of a bounce for a while. That's how new things were. So back then was future agriculture. in a index environment, it's a little bit different. As I was playing in different factors, it turned out to be actually a place for, if you see a certain pattern, that's your reversal is coming. Okay, and you can see this pattern, and you can see that reversal came. Now, this is news. This is news, so that's different. But post news get behind us. 8:30, 10 o'clock is Eastern time. 8:30, 10 o'clock. Then this stuff is really, really working because you got pure buy and sell, pure supply and demand. Again, the thing you want to be careful of against exogenous news. Let's say breaking news, some crazy stuff that we always see happen. Well, then that's where you have the stops. You put your stops in, and then you can put a small tight stop above this red line if you're short, or below this green dot if you're long. Okay, that's what we're going to talk about. It won't be a very long briefing, but would be interesting and very, very useful. We already issued the code out. It went out last week, or no, this week went out on Monday to all the happy expert people to start using it for feedback. Especially Admiral had requested a stay. Said, "Listen, I'm going to be away for a week." He took a first time finally. He took a vacation. Okay. After several years, he came back, and I said, "Okay, open your inbox. The code is there." So I want to see some feedback from him there. All right. What is this? Where's my? Hold on. I'm sorry, guys. Okay. Let me fix this. I hate to go forward on a chart that is not active properly. There you go. That's 393. Okay. All right. Any questions for me? I appreciate all you guys attending this. We'll do this again on Friday. Thank you.